Okay. Thank you, Mark. We
Hey,
can start.
good morning, everyone. All those of us who are hardy enough to have gotten. I think the electronics is more
And
trying than the
so are
weather.
you joining or not joining?
Who's that?
Sorry.
I'm, I'm letting someone in. Hold on.
Mhm. I'll just ask for all those not speaking to mute yourself so that way we don't have any background noise as we kick off the meeting. Thank you. Okay,
Okay.
Mark.
First of all, congratulations to everybody who's made it. And I'm acting as chairman because our other chairman had the wisdom to get on a cruise. So let's get started. I think the first item is the review of the minutes of the 28th of January meeting. Anybody
Mark,
have?
we'll do the roll call.
Oh, I'm sorry.
No problem. No problem.
I'm not used to being chairman of this thing.
Exactly. Don't we'll get through this one. We'll do
All right,
this.
let's go. I'm
We'll
Mark
start with the
Kaplan.
roll call. Okay. We have Mark Kaplan as our acting chair.
Present.
Thank you. Larry and Angelo.
Present.
Marsha Van Wagner.
Present.
Our
Oh,
public members representing Mayor Zoran Mamdani, Sarah Wang.
Present.
Representing Controller Mark Levine, Jacqueline Thompson.
Present.
And let me just check. Okay. We have a quorum. Thank you.
congratulations. Given what I've had with the last few days of trying to arrange other meetings and things, this is really a triumph. So I think we should pat each other on the backs a little bit and get going. First item of the business is a review of the minutes. Anybody have any comments, or should we just accept a motion to approve the minutes? Somebody please move.
Second.
All in favor?
Aye.
Aye.
Okay. The next item is the review of the annual report of the audit committee. And anybody have any comments on that document? Let me look at my document here. Any comments at all on the words or otherwise? If not, can I have a motion to approve this document, please?
Moved.
Seconded.
All in favor?
Aye.
Aye.
Any opposed? All right. We go this way, we'll get out of here in a hurry. Uh, the one of the things that accompanied this document was the charter of the audit committee. And just before I let everybody get away from that, I want to point out that one of the just little things that should be changed is it says delegated to an agency pursuant to subdivision H of section 93, and it doesn't say of what section it is. So maybe somebody will take a look at that.
Okay.
And then it says select the firm or firms of certified public accountants. The concept of certified public accountants is not a modern one. It's an independent accountant or something like that. And there's no reason why the charter should use outmoded language. So if the committee will bear with me, I'll talk to whoever drafted and we can fix that up.
I was going to say, yeah, Mark, we can go over it with Camille, whatever the edits that you have.
Okay. Then the next item is the I guess New York Health and Hospitals.
Yes. Do we have representatives from the New York Health and Hospitals Corporation?
Yes, ma'am, we are here.
Perfect. Thank you. Can you introduce yourselves?
Sure. Good
Oh,
morning.
there you are.
So thank you, first of all, for having this, via Zoom. Given the weather situation, we very much appreciate that. I'm David Guzman, the corporate controller for the Health and Hospitals Corporation. I'm joined here by key colleagues and teammates of mine. First and foremost, James Linhart, Deputy Corporate Controller, Olurutimi Diallo, Deputy Corporate Controller, Joseph DeBroja, Director of Financial Reporting, Nicole Fleming, Director of Audits. We're also joined here by our independent auditors, KPMG. We have Maria Tiso, Engagement Partner, Ryan Santanacida, Managing Director, Yim Yao Chen, Senior Manager. So today we will be presenting the FY25 financial statements. Just kind of from a high level perspective, Health and Hospitals for FY25 had total operating revenue of $15.75 billion, total operating expenses of $15.69 billion. And so as such, we had a small operating gain of $63.8 million. I'm going to turn it over to Joseph DeBroja. He'll walk us through the income statement and details of key financial trends.
Hi, good morning, everyone. Just as in the years past, we're going to be focusing on the income statement. Mr. Kaplan, that is page 15 of the PDF that you may have in your hands.
Thank you.
And if you're looking at it on the PDF, it's page 17 of the PDF file.
Okay.
All right, so we'll start off with a little bit of news or something new that you might not have seen before. We saw it back in fiscal year 22, and now we see it again in fiscal year 25, and that is the UPL conversion, prior period revenue, that you see within the operating revenues. So that's just a nuance. That really belongs in our net patient service revenue, but we had to break it out because it is prior period revenue. So I will jump into the highlights, starting with net patient service revenue. Net patient service revenue is made up of patient service revenue and our third-party retros, which are mostly the supplemental payments from UPL and DISH. When you look at the year over year on page 15, on page 17, our net patient service revenue decreased by $50.8 million. This is mostly due to the patient revenue increase of $644 million and the retro revenue decrease of $554 million, mainly in DISH. Then we see obviously, as I mentioned, the UPL conversion prior period revenue increase of $239.6 million. So if we're looking at the PDF file, we're focusing on the total column, as that is the consolidated column. Some other highlights from our net patient service revenue. Our CMI, case mix index, increased from 1.39 to 1.44, and discharges increased year over year by about 2,200. Okay. Moving on to appropriations from City of New York. So in this line item, we have the regular.
What page would that be?
What page? That's page. We're still on page 15, the comparative income statement.
Okay. Thank you.
Sure. Appropriations, that is the second line right after net patient service revenue. And appropriations are made up of tax levy and HERC, the humanitarian respite centers. So appropriations as a whole has increased $30.8 million year over year. The increase is mainly due to a big decrease in HERC of $615 million. And however, it was offset by a large increase in tax levy funds of $653.3 million, mainly for collective bargaining during fiscal year 25. Moving on, premium revenue. Premium revenue is from Metro Plus. And Metro Plus is consolidated within us. So premium revenue increased $199.6 million year over year. It is mostly due to the increase in members, and members increased 14,300 year over year. Grants revenue decreased $510.5 million, and it's mostly due to the FEMA COVID grants that we had in FY24 and we did not have any in FY25. Other revenue decreased 13.6 million. And of course, we see the UPL conversion prior period down below. Are there any questions about the operating revenues? Okay. Moving on to operating expenses. Operating expenses, we have PS, personnel services. PS increased $610.8 million, and mostly due to collective bargaining and an increase in full-time equivalents of 2,500. That's mostly the patient-facing staff. We hired about 770 RNs during FY25, 680 tech and specs, and 311 clericals, and about 250 aides and orderlies. This increase in PS, we can also see the decrease in OTPS as temp staffing decreased. Next line is OTPS, of course. OTPS decreased 273.4 million, and that's largely due to a decrease in HERC OTPS of $600.4 million. Fringe benefits increased $57.1 million, and that's mainly due to health benefits and FICA and Medicare increases of $35.7 million. Pension, as you know, and OPEB, we rely on the New York City actuary reports in order to record those numbers. Pension decreased 141.7 million, and post-employment benefits also decreased 42.6 million. Affiliation, contracted services, increased 237.4 million, and that is mainly due to contractual increases and estimated contract settlements, subcontractors, and other increases. Depreciation increased 6.2 million year over year, and we had, as a final result, we had an operating gain of 63.8 million for FY25. That concludes my portion, and we're open for questions.
I have a question. It goes back to the MD&A rather, sorry, on where it shows cash on hand on page 7 of the page number 7, I guess. It's not PDF 7. That shows us, declining trend in cash on hand. And I'm wondering if you could speak to that.
We've lost you. Can you hear her?
No.
Marsha, we lost you.
Lost me?
There you go. You're back.
Yeah.
Okay. I was asking about in the MD&A on page 7, the declining trend in cash on hand, and I wonder if you could speak to that.
Sure. So the cash is on the balance sheet, and that's page 14, the page just before the income statement. So if we look at the very first line that says cash and cash equivalents, and also the U.S. government securities right below. So you can see that the U.S. government securities have increased from 97.4 million in 24 to 251.8 million in 25. So while the cash decreased, the U.S. government securities increased. So it's just that we put a little more money into the U.S. government securities, mostly T-bills, to kind of earn a little bit of money there.
Oh, okay. All right. Thank
But
you.
it's, yeah, overall, it's about the same, right?
And on another topic, can you just, I need my memory refreshed on the arrangement with the city over the indemnification on malpractice and so forth, and how that works. I think there's sort of money going back and forth between the city and HHC.
Right. So the city pays it on our behalf during the year, and we are obligated to pay the city back at the end of the year or whenever the numbers are finalized.
Okay, and do you get a like running tally during, I mean, I guess you know during the course of the year what the malpractice awards are.
Yes, during the course of the year, it's normally been around 60 million. I think last year it was 47, if I'm not mistaken. It's been decreasing. But yeah, it's recorded on the balance sheet on page, just like I said, page 14. It is down in the liabilities section, and it is in the current portion of due to City of New York. You see that number 703 million. There's a lot of stuff in there like EMS, malpractice, and other advances that the city gives to us for T2 or HERC, and that's all recorded there. But you can also see it in one of the notes later on in the financials. I think it's like note 15 or not sure. Nicole, you know better which note it is, but it's all broken down in that note.
Okay, all right, thanks.
Sure.
It's note 9 on page 41.
Note 9.
Hard copy 41.
Okay, thank you.
Any more questions? I hate to point this out to you folks, but the name of the city is capital V, City of New York, and you are inconsistent in the usage, but more often than not, you keep it lowercase. So if you really want a minor fix, you should look at that. Okay, any other questions, comments? Thank you very much for showing up on a day like today. And let's go on to the next.
Mark,
Thank
for the
you.
record, I just want to announce that our representative from the Public Advocate's Office, Matthew Carlin, is joined onto our Zoom today.
Welcome. Okay. Let's see who's next. I guess the Bus Umbrella Service Corporation, which is an interesting name.
Do we
It's
have
a great
representative?
name. It's
the school bus?
it's
There we
so
go.
our name is Nice Bus. So NYC School Bus or Nice New York City School Bus Umbrella Services. We love our name. And we try to be a nice bus company. I'm Matt Berlin. I'm the CEO. And I'm joined by Ajmal Sheikh, who's our CFO, and Stephen Lee from CBiz, who's our auditor. And I don't think, Steve, do you have anyone else from CBiz that we should introduce?
We have some other members here, but they're representing other clients today with me. Daniel McElwee and Ron Mabiyad, but they're not connected to your account.
Okay, got it. So you're Steve. Steve is the one who every June puts on jeans and a t-shirt. He doesn't look this sharp and goes and counts buses. So he's a good representative for us. So I thought I would do a quick introduction to Nice Bus itself and what we've done, and then we hadn't prepared this, but Ajmal, are you okay going over the financials, the income statement?
Please go ahead.
Beautiful. Okay, so Nice Bus, as I mentioned, we're a nonprofit school bus company. We were formed in the year 2000, and we started operations on November 1st, 2001. We bought the assets of an existing New York City school bus company called Reliant. And we operate about 800 school bus routes across New York City. All of those routes are for children with IEPs, kids in special ed. We operate those from 6 depots across the city. We have a staff of about 1,700 people, 1,750. And we run 24 or 52 weeks a year. We run full summer service as well as school year service. And we are very proud of really the quality of service. There's been a lot of focus this year on school busing. Not only do we tend to hit right at the top of the measures of performance of bus companies. We're also very proud of presenting that performance on our website for everyone to see. Our revenue comes almost exclusively from the city, and Ajmal, I can certainly run through the financials. Ajmal is new. He started in late August, but Ajmal, do you want to run through those? Or should
Sure.
I? Okay, great.
Sure. I'm happy to do it. So we can go through the income statement. This is page 12, I believe, of the financials that you have, or page 14 of the PDF. And I can just go down the line. So we had total revenues of about 198 million, expenses of 195 million, which resulted in the net of about 3.6 million. Just to go through the major drivers year over year, most of it was driven by program revenues, which went up from 174 million last year to 188 million this year. That was driven mostly by additional routes that we took on. We also received in-kind contributions of 7.4 million. These are related to 25 electric vehicle school buses that were provided to us from a vendor who received them as part of a grant. On the expense side, the biggest driver there year over year were salaries and employee benefits for the program. That went from 132 million up to 142 million, 140 million. And that was driven by the increase in cost of drivers, as well as the increase in number of drivers to take over the additional routes. Our occupancy costs also went up from 3.6 to 5.9, that were driven by new leases that were put into place. And the third major driver was insurance that went from 18 to 19.4, just driven by higher premiums. And ultimately, that was resulted in the gain of 3.6. Happy to go into additional details. Matt, is there anything else that you wanted to highlight?
I think the only other thing worth highlighting is just that, the mayors always talk about this, but like us, almost 95% of our expenses are really related to running the buses, right? It's the staff, it's the fuel, it's the occupancy, it's the insurance. So we really are just an operating company.
Where did the concept of calling it a bus umbrella service come from?
I don't know. I think, it was the acronym that seemed so good. I think the idea, there had been some thought. This was a de Blasio project. And I think there had always been some thought of, the city has some challenges with school busing. And I think the then mayor, I think, had hoped that the transaction would have closed sooner, and maybe there would have been more under our umbrella than 800 routes is 10% of the city busing, and I think there had been a thought of to put more under our umbrella.
Before we get any further, I have one comment I make all the time. The last paragraph of the audit says it's solely for information you've made. I have taken the position, and with the support of the committee always, that these audits are public information. And the restraint that it's limited to the audit committee is inconsistent with being the behavior of almost every other unit in the city.
You're referring to the management letter, I think?
Yep.
Steve might be better at addressing this than I am, though I'm certainly happy to.
Well,
Yeah.
should know that.
So, Mark, you're referring to this communication is intended solely for the information and use of management, others within Nice Bus, and the Audit Committee of New York, that paragraph?
Yep. And of course, since the audit committee is an open conversation, there's no restraint.
We could look into that language for next year. What would be the preferred language that you would like to see there?
No restraints.
No restriction.
Look at any other organization that submits itself to our purview, we have uniformly asked them to get rid of it. and they have.
Okay. Mark, I'll have to explore that internally with the language change with the restriction and go through professional standards on that.
Let me just say this. It's hard for me to express this as strongly as I feel on a telephone call, but I have taken the position, which has been supported by other members of the audit committee, that this language is unacceptable. This call itself is open to the public.
Understood.
So
Yeah, so Mark, I'll explore that internally with, a modification to that restriction in coming years.
okay, well, you should just know this represents one of my pet peeves, and so far nobody has ever tried to keep the language.
Understood, Mark.
Okay. Any other comments on this report? Okay, thank you. When I thought of this and the snowstorm, I thought of umbrellas. It was interesting.
I do have a question for Matt, I guess, or whoever. So I'm looking at page 5, right, which I guess is page 5 in the PDF, and this is shown time after time after time in various things. You have the 7.4 million in-kind contributions, which basically, it seems to me, shifted you guys from being somehow in deficit to being in surplus, right? So can you tell me a little bit more about what the in-kind contributions are, where they came from, and what they're doing?
Yeah, so so those are that is a grant. So this is the way, and Steve and Ajmal probably might be better on the technical part of this. This is so we the first round of EPA grants we've won 4 rounds of EPA grants for electric school buses, about $100 million. The first round of that, in fact, we didn't win. The EPA made those grants to school bus dealers who applied on, and so this is a Biden EPA issue, so not our issue. School bus dealer applied on behalf of bus contractors, including us. And they, JP Bus and Truck out in Long Island, won money for 25 electric buses and charging stations.
From the city, Matt?
No, from the EPA, from the federal government.
From the federal government, okay.
They bought those buses and they delivered them to us. And that shows up on our books as an in-kind contribution from JP Bus and Truck. And I might have mangled the accounting there, so Steve and Ajmal can either say whether I did that right or not.
So that's the 7.4 million.
That's the 7.4 million.
Okay, so some other bus company managed to get some
a bus dealer. So it's a dealer that yeah.
The dealer. And they managed to get some money from the federal government, and that and does that relieve you guys from adding in additional buses?
So that is 25 buses that did not have to be bought through the city's capital.
Gotcha.
In fact,
Okay.
the full 100 million that we won means $100 million the city doesn't have to spend.
Okay. All right. Thank you. That was very clarifying. I appreciate that.
Good point. Any other comments or questions? Thank you very much for being with us on this unusual day, and I think we'll go on to the next.
Thank you.
Let's see who's next. Who's deciding who's next?
Hi, Mark. Next we have our school support services.
Okay.
And I see Brooke.
Good morning. How are you guys?
Morning, Brooke.
So my name is Brooke Jenkins Lewis. I'm the executive director here at NYSIS, or New York City School Support Services. With me, I have Vishal Patel, who is our CFO. And also joining us is Joe Lazarus, the senior executive director of the New York City Public Schools Division of Operations, and Phil Napolitano, who's the director of the New York City Public Schools Division of Operations.
Okay.
So I'll jump right in. So we were established in 2016, similar to Nice Bus, at the direction of the de Blasio administration to modernize and centralize the New York City Public Schools custodial operations. We replaced the former indirect system with the centralized structure designed to strengthen financial controls, improve operational efficiency, and ensure greater accountability across the system. Under this model, custodial engineers remain New York City Public School employees. However, we centrally manage budgetary oversight, hiring, and human resources of the custodial helpers. This shift removed personal financial responsibility at the school level and allowed us to implement standardized business controls and consistent operational practices. Our structure also enables the strategic deployment of custodial staff across school buildings to meet system-wide needs. A perfect example of that was this last snowstorm. Today, we employ approximately 6,500 to 7,500 custodial staff members, scaling seasonally during peak periods such as summer operations. Since our inception, we have consistently delivered clean, audited financial statements, underscoring our commitment to fiscal integrity, transparency, and sound governance. So from there, we can go through the financials or see if you guys have any questions from there.
Is this the group that took over the custodial responsibilities?
Correct, the custodial helpers.
Oh, I remember when I was on the audit committee for the Board of Ed, and how badly managed these things were.
I'll defer to Phil and Joe to comment on what it's like today versus before, but I think that since we've been in running in a business, it's centralized all of that, and the employees are directly ours. The custodial engineers still manage, but we provide all the helpers and have consistency across the board. Go ahead, Phil.
I remember when one of the custodians was running well, I won't comment, never mind. If anybody has no other questions, let me just point out the same thing I have addressed before to one of your colleagues, and that is that you're saying here that you're not releasing this information, and that last paragraph is, at least to this member of the audit committee, unacceptable. This is a public disclosure situation, and the public gets all this information. So your statement is inconsistent with the practices of the audit committee.
We'll work with CBIZ for the upcoming financials to see if we can get different language. I know Stephen has now been added to our account with Ron, so we'll work together with that.
Okay, I don't talk harsh, but at one of these prior conversations with another accounting firm, the audit committee took the position that if you insist on it, you won't be the auditors.
Yeah, Mark, I will definitely revisit, but I would like to mention that there is an auditing standard that sits under AUC 905, and with that, there is mention that a restricted use on a report, it can be made in a matter of public record, but we will go back to the drawing board and revisit the language to find something that would be acceptable to the Audit Committee of New York.
Anybody else have any comments, suggestions?
Yeah, I have a question for Brooke. This is not entirely a financial question, but you guys have this has been changed over how many years? When did we first do this? 2000 when?
16 August of 2016 was the inception.
Right. Okay. So that's now you're looking at almost 10 years of this, and I have to assume that the custodians obviously during those 10 years had to change how they did their work, right? I mean, they're not because you guys are basically watching out for the people who are working under the custodians, I have to assume that perhaps the custodians changed the way they did their work. Do you have any sense of that?
So I'll defer to the Division of School Facilities to fill in to Joe from that aspect of it, because I can't speak to what it was before us.
Thank-
But I'll pass it off to them.
Thanks, Brooke. Thanks, Lauren. It's a really good question. It's funny because I was just thinking about this a couple of weeks ago. We have over half of the custodian engineers now currently employed by New York City Public Schools who have never been part of the old system. So many of the people that have been hired over the last 10 years, they only know this world. So yeah, there are still remnants of people who came from that old system, but they were forced to adjust. This was not, it was not even a question for them. If you want to hire people, this is the process to hire people. If you want to terminate people, so that is a huge benefit to the city to have these centralized decisions being made. So we no longer had those silos of independence where they were these kings of the castle. It's gone now. So it's definitely it's a huge improvement.
And
I'm
sorry.
And has it helped actually have people hired who were working under these custodians, although under control from you guys, better at their jobs, happier to be there, more? What I'm trying to find out is, and I think you're going in that direction, is that having changed this, you changed what the custodians, or at least half of them, do. And if you've changed half of them, my assumption is the people who get hired and who are, basically directed by the custodians are better workers.
Yeah, I think it all, just to put a fine point on that, all custodians have changed. Not even half. Everyone, the half that was here prior to 2016 has changed.
Yeah.
And the few you talk about the few bad apples maybe that you want to say that would have resisted. In 2016, when NYSIS negotiated their contract with 32BJ, there was a provision that never existed before in the history of that collective bargaining agreement, which allowed 32BJ employees to transfer voluntarily from schools. So there are situations where if there is a conflict with the supervisor or something like that, that employee can voluntarily transfer to anywhere in the city. So that right there in itself is a huge difference that did not exist in the prior system.
Now, bringing a little of my history, when I was the chairman of what was called the Audit Advisory of the school system, the amount of misconduct in the custodial force was horrendous.
No comment.
Okay, no need. So thank you very much. It seems like this is a very successful
This is a
change
that
the city.
You found custodians with one or two cars and running shooting galleries. This represents, apart from finance, represents an enormous improvement.
I haven't seen that in my 26 years here.
Good. Okay, any more questions? Thank you for coming, and I guess we'll move on to the next.
Thank you. Thank you very much.
Next, we have the Educational Construction Fund. Do you have a representative from ECF?
Yes. Good morning.
Good morning,
I'm
Jennifer.
trying to, okay, there we go. Nope, I left it again. Oh, there we go. Good morning, everyone. Jennifer Maldonado I'm the CEO of the Educational Construction Fund. I'm joined here by my colleague, Cynthia Wong, who is our CFO. I'm sorry, I'm just trying to, the computer sometimes messes up here. And I have two of my colleagues from CBiz joining, Dan and Stephen, who are also joining us today. So I will get to it. Always good to see everyone here. This is one of my favorite opportunities to speak to Mark and to everyone else here. Katrina, everyone else, thank you so much. So I will just give a brief overview of ECF's 2024 financials, 24-25 financials. Our net operating income had increased to 30.9 million in 2025 compared to 28 million the previous year. Our rental income and tax equivalency payments from our existing properties, which are approximately 18 properties, totaled 40.8 million in 2025 compared to 39.4 million from the previous year. Our 80 Flatbush schools were completed and opened successfully in September 2024. Accordingly, 158 million of construction in progress became a depreciable asset as the schools were placed in service, which is how we commonly operate. Thus, the fund's depreciation increased from 6.3 million in fiscal year 2024 to 7.4 million in 2025 to include the initial depreciation on those schools. The current portion of accrued liabilities decreased from 8.6 in 2024 to 1.1 million as of June 30th, in part because ECF paid out retainage as the school construction was completed. We continue to make significant progress on the completion of the entire combined occupancy structure. The development in total includes 3 new schools as well as residential and commercial buildings. For that phase 2 of the 80 Flatbush project, which is the second residential building, we received a one-time 4 million additional rent payment, and phase 2 will again add a second mixed-use tower, which will include a significant affordable housing component. In December of 2024, we redeemed a portion of our 2010A Build America bonds by paying down 15.6 million of the principal. That partial redemption results in 7.45 million in interest savings that would have been paid through 2024. The net present value savings offset the bond redemption premium of approximately 1.2 million, which is reflected as a loss on redemption of the bonds in the financial statements in front of you. That redemption also reduces our exposure to further federal budget cuts. Those budget cuts we are seeing in our 2010A bonds because we have received a reduced Build America bond federal subsidy payment due to those federal cuts from sequestration. In 2025, we accrued an additional 1.1 million of arbitrage rebate liability from interest earned in excess of bond rates, which will need to be rebated to the IRS in future years. As of June 30th, 2024, the arbitrage rebate liability was $848,050. The interest rates earned recently have exceeded the favorably low bond rates when ECF issued that debt. Those are top line comments for you, and happy to answer any questions you may have on the financial statements as a whole. I believe we've capitalized city in the entire document, Mark, so taken some of your thunder away from you.
Any questions?
Yeah, I have a question. Are BABs still around? I mean, you still could. I understand that you're using up what we got the first, in the first few times, but is it still available to get a new BABs?
You mean if we would need new BABs,
Yes.
You know what? I actually don't know that answer. Cynthia or Dan or Steve, do you know if BABs are still available if we were to look for them? I don't know, actually.
I don't think so, but I'm not 100% sure. So
I don't think so. I think the BABS program was terminated.
You think it was terminated?
There you go.
Okay.
Thank you.
But you have, do you have still some babs left that you haven't kind of used for
Yes.
anything? Okay, so you
Yes.
have some in your hands.
Yeah.
And the other question I wanted to ask you is, I'm looking at your, your listing and of what you guys have done. Now you have an early childhood center. That's okay.
Yes.
That's
Yes.
within the Babs ability, right?
Correct. Within our charter, it allows for any development project that would include an educational facility
Right.
or facility in use by the Department of Education. So that
Right.
is from a typical school to an early childhood to even DOE administrative offices. So all of those things are covered. Mhm.
And how do they define early childhood? What goes into that?
That's changing right now.
Okay.
So it was
I'm sure
typical.
not for the better.
Well, no, I
Mhm.
I will give some credit to the new administration. I think Mayor
Mhm.
Mandami wants to include the childcare daycare into early childhood as well. So that would be included in early childhood.
And that was exactly what I was going to ask. And if it's okay, and if it can be done that way, you can use a BAB to do that. That's great to hear.
Yeah, I mean, quite honestly, we're still trying to I think the city is still trying to figure out what that looks like and how that will be implemented and whether
Uh-huh.
that's implemented through the Department of Education or through CBOs or some sort of mix of that. So
Mhm.
we're really eager. We have a new project that we're hopefully going to bring online um, next year at another site in Brooklyn, and we're hoping to include daycare and
Great.
more early childhood.
I'm happy to hear.
Yeah,
That's
we're
great.
hoping. We're hoping.
Okay.
If you want to put in a good word for us, I think
Yeah,
it's a
will
great
do. I'm
opportunity.
happy to do that, as if
Yeah.
anyone would listen to that. But yeah, I'd certainly be happy to, because it does give you that flexibility, especially I think if you're looking at a school where, the level of students has declined because it's
Yeah.
just,
Mhm. Yeah, I think
demography, right?
obviously it's what is quote unquote called a pathway. So if
Yeah.
you have early childhood, you have pre-K, you have K,
Yeah.
and all in the
Yeah.
vicinity, I think those
Yeah.
are what you're
Yeah.
hoping to
Yeah.
achieve for the parents that live
Yeah.
in those neighborhoods.
Right. And you've also used a building that's no longer half empty or anything because it's been full
Well,
with little kids, right?
not to take, away from the conversation. I think the Department of Education has a struggle right now because there is something called class size reduction legislation that went into
Mhm.
effect
Yeah.
last year. So that excess space that you're talking about has to be used for those purposes. Um,
Uh,
so when you think that there's a lot of empty classrooms out there, I think if you speak to my colleagues at SCA, or DOE, they would tell you that's not really empty space. That's going to be usable space very, very quickly. So there's going
mm,
to be a need to build more, quite honestly, instead of just looking to excess to try to remedy that or answer
mm,
that class.
mm.
So
Okay, thank you.
Couldn't understand the concept of the tallest passive house building in New York.
correct. So passive house is an energy efficiency model that's often used in a lot of European buildings, and that would bring down the emission standard, the emissions protocol in the buildings. I know that for 2030, I believe the New York City has a mandate to lower emissions for all city buildings. So using these kind of methodologies, which is a contained air pressurized system, it lowers the emissions. So that gets, us compliant at the offset with a lower emission standard.
So the tallest what
Passive house.
what are you when you're a passive house?
So Passive House is a certification. So it's a new cooling and operating system that allows for a um, lower
Um,
emission retention.
and people generally know what that means, I assume.
I would tell you, maybe not in this country, but it's used in a lot of most Norwegian countries use this as a way to lower overall carbon emissions. Mhm.
Okay, I, I'm trying to imagine how a building is passive.
Again, it's a sort of circulation, contained air capture system that is different than a typical building.
Any other questions?
Yeah, I do. I have a question. And it has to do with the lease receivables. I think you're, getting leases from developers for these projects.
We lease to the developer. The developer does not lease to us.
Well, they pay, what I mean is that they're paying lease payments to
Correct.
you.
Yes.
Yes, they're
Correct.
paying lease payments to you.
Mhm.
And so I guess what's in the back of my mind here is, are these developers like bankruptcy remote? Is there a risk that the developers, as developers sometimes do, declare bankruptcy? And
I mean, I'm not going to say that that could never happen. That's never happened in our, history of ECF. There are a number of guardrails that we put up in terms of collateral, and that the developer has to put up in terms of collateral and liens against their own properties. So we have a pretty robust sort of model that they would essentially, we're probably first in line if something were to happen, but there's enough equity that we need them to show before we even enter into a conversation with them. So we really do a lot to look at what's behind each of the companies, so that if there is, you know, a complete collapse, that the penalty would be so great that we would be able to have enough to find another developer if something were to happen. But the penalty is so large that, again, the opportunity or the option of bankruptcy and how that would affect ECF, I feel like we're pretty well prepared for anything like that to happen in the future.
okay, all right, thanks. Good to know.
Yeah.
I have one last question.
Yes, Mark.
The reference on page 9 to a loss on redemption of bonds.
Page 9.
Is that because you prepaid early or what?
We redeemed a certain amount of. Cynthia, do you want to? I'm looking for it. Cynthia, do you want to jump in there?
So page 9. Oh, so yes, there's when you prepay bonds, there's a redemption premium. According to our auditors, the accounting term for that is the loss on redemption of bonds. But just if you prepay bonds, it's worked into the what is the price if you prepay early. But in this case, the net present savings that we have on the interest actually outweighed the redemption premium that we paid.
That's what I thought. So that as an economic matter, there really wasn't a loss in connection with the redemption of the bond.
100%. That's what I said too to our accountants, but they said no. We had Warren Ruppel actually, who wrote the book on government accounting, and he said it is called a loss on redemption of bonds, right, Dan?
Yeah, because the proceeds that you paid in to redeem the bonds exceeded the carrying value of the bond. So there was a book loss, but there's present value savings on interest over the term of the bonds, and that's disclosed in the notes.
Yeah, I tried to call it a redemption premium, but I said, you know what? Our accountants want to call it that. I'm going to go with what they say.
Okay. At least I was in good company. Any other questions? Well, thank you very much.
Thank you. Always a pleasure. Have a good
much.
rest of your day.
Okay, I think.
Next up, we have the School Construction Authority. Do we have representatives from SEA?
Yes, you do. Good morning. Hi, my name is Steve Maroney. I'm Senior Director of Finance at the School Construction Authority. This morning, I'm joined by Ewen Wang, our Director of Accounting Services, and also by our independent auditors, Stephen Lee and Dan Michelby. I will begin by just giving you just a general overview of our SEA's operations. Basically, SEA was formed in 1998 as a public benefit corporation. We build new schools in the city, in the 5 boroughs of the city, and we also rehabilitate existing schools. We're currently operating in our 8th 5-year capital plan. And the years it spans is FY25 through FY29. So we're currently in the 2nd year of our 5-year plan. The plan is valued at almost $21 billion. And the plan is made up primarily of SCA building, adding new seats to the system, building new schools. So that represents approximately a third of our capital plan, $7 billion. We also have another $8 billion of capital improvement. That's to rehabilitate windows, roofs, miscellaneous types of upgrades which need to happen. And then we have other healthy schools. We have electrification projects under there. And then finally, we have our mandated programs, building code compliance, environmental remediation, emergency projects, and so on. So that's where, so the SCA is $21 billion over 5 years. We're in the 2nd year of our plan. For FY25, which was the first year of this plan, we obligated approximately $3.6 billion. In that year, we awarded 6 new capacity projects for $454 million, and we awarded 398 CIP projects for $1.8 billion. This past September in 2025, we opened 11 new schools, and we added 6,254 new seats to the system. One major highlight of this last September's opening was we opened a school at the Queens Innovation Center in Woodside, Queens. It's a building that we took over. It's a 6-story building with 3,066 seats. It's a high school campus serving 4 specialized schools, and the project represents our continued investment to modernize career-focused educational environments. This current year, we're currently in FY26. We're expecting to obligate $4.2 billion. We're expecting to award 14 new capacity projects and 350 CIP projects. One major highlight of this year that we'll be awarding is the St. John Villa Campus Redevelopment Project in Staten Island. This is a brand new educational complex scheduled to go to bid. It's going to deliver 2,000 seats to Staten Island over the next 5 years. It includes 1 pre-K through 8 school, 2 6 through 12 grade schools, a new athletic field with 700-seat bleachers, and a large-scale geothermal HVAC system serving the entire campus. This upcoming September of 2026, we plan on opening 10 new schools, adding approximately 4,272 seats to the system. Each year, we continue to create seats to support the student population of the city. And that's basically the overview I prepared, and we're happy to answer any questions you have.
Well, let me start off with one. You on page 7, you say cash is secured through J.P. Morgan Chase and collateralized. How is cash collateralized?
Hey everyone, this is Yuen. So basically, the bank is required to collateralize any cash that they're holding on our behalf, and they put it into the U.S. Treasury securities.
Oh, secured meaning, oh, I thought you said secured would mean buying it through. This is the way in which you collateralize things. All right. I misread the language. And then on the revenues thing, operations revenue from or due from the city. Is there any indication of the timing of that having to do with what due from is?
So basically, are you looking at specific on the government-wide side, Mark?
I'm looking at page 10. It says operating revenue from or due from the city of New York. And presumably if it doesn't get paid promptly, there's some, I just,
Yeah, so that number is basically revenue. Well, it's composed of two things, accruals. So basically anticipated payments that we've already incurred but have not paid out yet. And also any expenses that we've already incurred throughout the year. So this operating revenue is basically the funding that we're showing that we receive from the city in any given year.
and is there an interest factor that's implicit in this or not?
No, there's no interest in this. This is pure actual expenses.
Okay. And then when you get down to OPEB, what OPEB expenses, the payments capitalized?
Yeah, so there's a component in the OPEB where we perform contributions, or payouts, right, for the benefits. And because of the nature of how SCA is formed, we capitalize certain costs because of the fact that we are a capital entity. So any cost we incur needs to be administrative capitalized. And so as a function of that, the accounting is a little quirky on that. And so because of that, it ends up being a negative balance.
Okay. All right. One more question about the numbers here. In expenses, interest expense jumps enormously from one year to the next without an explanation. Goes from 647,000 to 4,000,006.
Okay, give me one moment. I believe this is related to our leases that we currently have. And so what happened in 25 was we have a new building lease that came about. And so due to that, we moved from our prior old building in 3030 Thompson to Court Square in Long Island City. And because of the new lease, it had increased in value and we have to perform a net present value and thereby the interest went up for that.
Okay. Well, that one and the operating transfers, which goes from 400, it's like $400 million difference.
Operating transfers on, oh, so this is actually the work that we do on behalf of the Department of Education. And so it actually went down this year. And I think it had to do with, I guess, my understanding was I know majority of the difference is relating to the Division of School Facilities, Mark. So this past year, they had a review of their internal process. And so in the prior years, we were always able to obtain the accruals and estimates of costs that they haven't billed us. And this fiscal year 25, they changed their process where they were creating POs directly rather than paying themselves and billing us for the costs that they incur.
So okay. That's such a large change.
Correct. They had a change in estimate this year in terms of estimating their cost. So.
And in footnote 2, they only capital projects fund is reported.
Can you let me know where you're looking at in footnote 2, please?
And there's a sentence that says, based upon the nature of operations of the authority, only a capital project fund is reported. I couldn't.
I'm sorry, which paragraph?
The third paragraph from the bottom, last sentence. Based upon the nature of the operations of the authority, only a capital project fund is reported, as to all transactions related, etc.
Based on the nature, okay.
I didn't understand what I was being told. Maybe somebody else understands it.
Oh, so it's basically discussing our fund financials. So we don't have, a typical fund financial statement would have capital fund, they may have services. Ours is only pure capital.
I'm not sure I understand anymore about that. Now, there's something I saw here I haven't familiar with on page 16. It says that half-year convention. What is that?
16, I'm sorry, where on 16?
See, the paragraph, capital assets,
Okay.
amortization, oh wait, apply. It says it's applying the half-year convention.
Oh, so it's basically the half-year convention is the depreciation method that we apply to the first year. So any new assets we purchase, it's on its first year, it's 50% depreciated.
It's interesting. I haven't seen that before in anything. And then amortization, which includes leasehold improvements, lease assets, are amortized. What that is saying is amortization or amortized. I think your English is a little tough there. And then in construction and process, it includes initial outfitting, construction contract costs. What does that mean?
So the startup cost for a new building or any buildings that are in place, the initial outfitting. I don't know, see if you have any further information to add on the initial outfitting.
No, I think that's good.
I don't know what outfitting construction costs consist of. I'm not sure you.
I'm sorry, Mark, can you repeat that again?
If you look at the caption, construction in process, and it says initial outfitting construction contract costs. I'm asking, what are those things?
We'll have to take it back and get back to the specifics, what the initial outfitting is.
Go back to the paragraph above that. Amortization, which includes leasehold improvements, lease assets, are amortized. So it's amortization are amortized dramatically. I think we'll figure out how to deal with that better.
And I'm sorry, what's the question?
If you look at this capital assets paragraph, it says amortization, which includes leasehold improvements, lease assets, are amortized. So what you're saying is amortization are amortized dramatically.
Okay, how would you like us to change that?
Well, no. All I know is to say that amortization includes improvements are amortized.
Well, we'll take a look at to see how we can rephrase it for more clarity, Mark.
And then when you get to the your references on page 17 to investments are a little, I know what you're getting at, but it's, I give up. The other little thing I always say, I'm not gonna bother with that. Oh, on page 19, investments, is what I learned. There's a statement, investments are recorded at fair value, U.S. Treasury bills, and notes about use of quoted market prices, comma, as such. Something's wrong there.
Okay, we'll take a look at it.
Well, and then the interest rate risk. You say I understand what the sentence first one means, and you say it means the limited exposure to fair value losses, but the authority monitors the duration. Well, once you own it, you're stuck with it.
Yes, but in order to determine, how long to invest in the investment, we actually do monitor the interest rates uprising and as well as, duration impact of it to determine whether we want to do a.
Anybody else have anything else here?
Yeah, I have just two, I think, quick questions for Steve. The first question is, I seem to remember that, you're not, in your first year of your new 5-year plan, but I seem to remember that there was always like some stuff left over from the last 5-year plan. Are you still paying for that? And if so, like how much? Just to get a sense.
Yeah, it's called completion costs.
Yeah.
Right. So when we finish one capital plan, there's ongoing construction projects.
Yeah.
And those projects need to be completed, and now we're into the next next
Right.
5-year plan. So I believe we put approximately $1.4 billion into this capital plan in order to complete projects which originally started in the prior capital plan.
Okay. And is that 1.4 billion charged to the last 5-year plan, or it's charged to the new 5-year plan?
It comes out of this current 5-year plan.
Okay, so that's in the current 5-year plan. Yeah, I never quite understood that. Okay. The other question I have for you is, you said something about a new project on Staten Island,
Yes.
Could you elaborate that a little bit?
Sure. The name of the project, it was St. John Villa was the name of the project.
Yeah.
I believe it was a large Catholic campus.
Yes. Yeah.
And basically what we're doing is we've taken over that facility, and now we're putting new schools in there.
Right.
So basically it was a brand new complex. What's going out to bid this year. It's got 2,000 seats. It's got multiple schools. It's got a pre-K through 8. It's got 2 middle schools. It's got a new athletic field with bleachers, and it's got a large geothermal HVAC system.
That's great. And could you send me some information on that, just because I know that Staten Island is always, hoping it gets bigger schools and better facilities. And this sounds like it's an incredibly important one, because it's in Mid-Island. It's not, the North Shore, and it's not the South Shore. It's Mid-Island. And I actually think Staten Island is one of the boroughs where population is growing, I think. And so would you mind sending that to me? Because I would just like to see how it's going to work out, because I have some sense of what that very large campus looks like, and it is huge.
Yes.
And has a little hill, and it will be a great place to put a new school. So if you can send it to me, I'd love to just have a look at it. So
Absolutely. Okay, I will do
thank
that.
you, Steve.
Sure.
Do I need to give you my email or something like that?
Yeah, that would probably make it a little easier.
Okay, so tell me what yours is.
Sure. S. Maroney, SMARONEY
Yeah.
NYCSCA.org.
Okay. Okay. All right, and I guess I didn't get all that down, but if you can send it to.
I'll coordinate between Steve and you, Larry, and
Thank you so much. I totally appreciate it. Okay.
Thanks.
And Staten Island will thank you for it.
It's already a heavily subsidized borough.
Well, they don't feel that way. I hate to say it to you, but that's not how they see things. And
Anything, if you look at the way they get charged for things.
I hear you, but this will be a nice piece to be able to talk to folks there because it's and they do actually need more schools and I think that that's fair enough.
I, as long as we have another minute here, if you look on page 27, there's a statement that says no assets are accumulated in a trust that meets the criteria on CASB 75. What's I guess I just didn't understand what that was trying to tell us. Anybody else have any questions, comments, or anything else?
I don't have anything.
Then let's thank the Schools Construction Authority for coming and giving us a good explanation. And I think that brings us to the end.
We have one more presentation, Mark.
Yes.
We have the report to the mayor and the city council by the city controller's audit operations.
Coming to that, yeah.
So I believe we have Maura here from our audit bureau.
Okay.
Good morning, everyone.
Good morning.
Nice to see you again. I think you know, but for the record, my name is Maura Hayes-Chafe. I'm the Deputy Controller for Audit, and I am joined by several of my colleagues that I'd just like to name. Edward Carey is here on the call. He is an Assistant Comptroller with the Audit Bureau. Marianne Mullaney is also an Assistant Comptroller. Tara Leary is an Executive Director. And Colban Netland, who's joining us for the first time, is the newest recruit, as he's recently been promoted as the Director of Vendor Auditing. This was a newly created position. We created it toward the end of 2025 in recognition of the sheer size of the vendor and contractor expenditure in New York City. As an example, in fiscal year 2025, a total of $42 billion in new contracts was added to our expenditure slate. So it's a huge amount of money, and we wanted to dedicate resources to auditing in that space in particular. The annual report that was issued for fiscal year 2025 included a look back on the Audit Bureau's work under Comptroller Brad Lander, because it was the last year of his term. Briefly, these include shifting to bigger, more complex audits focused on answering big questions and on driving change. We introduced participatory, or we often call them people-powered auditing, focused in particular on NYCHA residents and on residents with disabilities. In both cases, we were undertaking initiatives to enhance public engagement and to provide traditionally unheard groups with a voice. So in the case of the NYCHA people-powered audits, we introduced a committee which culminated in which was the end of several months of engagement at NYCHA developments across the city, seeking input and ultimately asking them to choose audit subjects that we should engage in. During 2025, a new committee was set up, and that work will continue into the new term. We are currently auditing capital expenditures based on New York City expenditure on capital in the NYCHA developments, looking particularly at, how NYCHA developments prioritize capital project work and so forth. Again, this was selected by the newly seated committee membership. They voted on this subject, and I have to say that uniformly, all of the members expressed most concern about where all the money has gone. at NYCHA. I think everybody is aware that there are shortfalls, but from the residents' perspective, it's a question of where did it all go? There is so much money at stake. So we are looking particular at capital expenditure, and we will no doubt be reporting out to this committee on the results of that audit when it is completed. We also began selecting audit subjects by committee within the Audit Bureau and within the office as a whole, with a focus on strategic objectives set by the office. We began tracking audit deliverables against those objectives, both on a primary and secondary contribution basis. And, I'm not going to go into those because they're reported in the latest annual report, but overwhelmingly, they focused on effectiveness and efficiency, which is appropriate, I think, given our role within government. We began tracking instances of real change rather. The purpose of an audit is to change behavior. And so we do that in a variety of ways. We track when there are local law changes, when there are policy announcements, when we are called to testify, when hearings are held, and so forth. We also track media coverage of our audit reports, not because we report to a principal who's a politician, but because media coverage is without doubt a leverage for change. There's nothing like good coverage of an audit to generate agency response. We found that to be true, and we will continue, therefore, to focus on that measurement. We stood up a public-facing recommendations tracker, and although the charter only requires us to ask agencies once what their implementation status is, we continue to track to this day recommendations that were issued all the way back in 2022. We've accumulated quite a bit of data over that time, and I'm pleased to say that the implementation rates remain generally pretty high. We can also see in the data that it generally takes 2 years or so for agencies to complete their implementation efforts. Over the 4-year period, we issued 785 recommendations. Overall, agencies agreed to implement 61%, partially agreed to implement a further 9%, disagreed with 16%, and did not respond to 2%. The implementation rates, as unsurprisingly our highest for calendar year 2022, were approaching the 77% mark. For calendar years 23 and 24, we're sitting at about 55%, and calendar year 25 issuances are still relatively low at 22%, even though more than 50% were agreed to for implementation. It's just a matter of time. The agencies report that a further 4% of all recommendations over the 4-year period have been partially implemented, and they are committing to implementing a further 30%. So they indicate to us that they are still implementing in process. I'm very proud of the work that we've accomplished in the last 4 years. The kudos for that really goes to the 4 unit heads who are sitting on the call that collectively oversee between 20 and 40 staff. And because of the shift to more complex questions, audits that focus on big questions, the work itself has become more complex. And as a result, we've also undertaken, the 4 here represent a structural change. Traditionally, the Audit Bureau had a larger staff, and it also was divided into just 2 assistant comptrollers. But because the work has become more difficult, we have divided it now into 4 teams so that they can be more involved in coaching staff and ensuring that the work is focused on impact and answering big questions. It's easy for auditors to become bogged down in the minutiae. And so it's important, the role they play is really very important to the work that we produce. I have to say that I'm very proud of the work that has been completed. And we're also very sure that the work that we do will continue very strongly under the new leadership of Controller Mark Levine. Controller Levine's priorities have been announced at this point, at least internally, and 3 of those directly impact the audit work. I'm going to read some of the iterations that he has given them because they are broad concepts. The first is a focus on housing and affordability, equity, and modern urbanism. The term modern urbanism is meant to focus on things that are necessary, innovation, for example, to ensure that New York City continues to thrive. Things like climate, workforce development, housing market, and that we are responsive to the changing economy. The second core priority that will impact the audit work is inspiring New Yorkers to trust the government. We know that trust in government is at an all-time low, and it's part of our job by increasing transparency and demonstrating accountability through our work to ensure that that is lifted over time. So the intent is to exercise rigorous independent oversight and to ensure public dollars are spent responsibly, transparently, and in ways that deliver measurable impact for the public. This is going to show in many of our audits, but I think the vendor auditing team will particularly be present in this, the work from that team. The third core priority is to innovate government processes to make government work better for New Yorkers. Mark Levine has expressed a very strong interest in modernization, leveraging technology, and really ensuring reforming processes so that unnecessary bureaucracy is reduced, so that folks that rely on New York City are able to engage more quickly and get what they need from government more efficiently. So you will begin seeing in the next audit report these 3 core priorities reflected as we categorize the impacts from our audit work. In addition to these 3 priorities, in lieu of secondary objectives, we will begin categorizing the work by subject matter. So for example, if the audit focused on housing, it will be nominated into a housing bucket. If it focused on affordability or equity or climate or technology, that will show rather than a secondary contribution. We go into 26 with 61 pending projects. Most of those were selected under the prior administration, but they nonetheless will be reflective of Mark Levine's vision, I think, as we tinker with planning to meet his new objectives and priorities. And we are also in process of starting 4 new projects that align squarely under his core priorities. And over the coming year, we expect to start a further 25 or so new audits that have been selected based on those new priorities. That's it for me in terms of testimony, but I'd be happy to answer any questions that you have.
Anybody? It sounds an awful lot of work.
It is a lot of work.
And you have to be congratulated on doing it.
Well, thank you.
Yeah, I echo that sentiment. I think the Audit Bureau has really matured in recent years, and it's good to see.
Thank you so much.
Something occurs to me because I've had conversations about this once in a while, and that is the audit committee could be helpful in attacking some of the problems that result from what the audit does by publicizing it or trying to get the agencies involved coming before us and trying to hold people more accountable. Sounds to me like you're in the same ballpark, and perhaps you might find it useful if you wish, to some way in which the audit committee could be helpful.
I think one of the areas that you could really be helpful in is increasing responsiveness by agencies. We are in process of calculating the amount of time that we spend waiting for auditees to respond to our audits. And we will progressively going forward begin including findings for auditees that are unresponsive. Once those calculations are available, I will, if I can get the agreement of the administration, I'd be happy to share them with you. But you will find, particularly in the last 2 years of the Adams administration, probably coinciding with Brad Lander's announcement to run for mayor, there was a definite strategy of slow walk. And we have found it very difficult to complete our work. We depend on agencies to provide us with data and documentation to complete our reviews and our testing. And if they flat out refuse to do it, we theoretically can file a subpoena and we can theoretically go into court. But the reality is that won't get us a speedy response. Litigation takes 2, 3, 4 years. And so it's a tool that is at our disposal, but it's not a particularly useful tool in terms of getting responses.
I would just let you know, having worked at O&B for many years, I think I don't know if you've ever, had conversations with people in O&B where, something looks odd and you want to
look at it,
do an audit of it, and you're getting no response, that you could get a very quick response if O&B was sort of in the mix with you guys.
Okay.
I mean, I don't know if you'll get there. I don't know how it'll look, but it's something to think about, because, they're not, O&B is not going to be happy to have an agency screwing around with financial issues, if that's what you're looking at. So, you might.
Okay. I'll take that on board. We'll certainly consult with people like Francesco is on the call.
Yeah.
And see if that is an area we can pursue.
Yeah.
I'm hoping that with the new administration and with a new comptroller, there will be an opportunity for some of the agencies who have been least responsive to improve their responsiveness over time. But as I say, sort of in desperation, we've decided that we will begin including a finding of lack of cooperation with the audit process in some reports when we've got extreme examples. And I won't name them today. I'd rather to have data with you, but there is certainly the team who is here could name several who consistently make our work difficult and prolonged.
And again, I can't imagine easily that, a connection to O&B with an agency that's not being responsive to your auditing of something that's not working well, and they're resisting it. I suspect O&B might help.
Okay, thank you. We'll take that on board.
In the private sector, where I've spent my life, very often I've been on an audit committee, and if the operation is not cooperated, when the time comes for bonuses or salaries, the organization that wasn't cooperating with the audit committee, I insist on constraining their compensation. That has a very beneficial impact.
Yes, I can imagine so. Unfortunately, not in our kit bag.
Well, one of the differences between the public sector and the private sector is if you're on the comp committee committee of a board, you have direct relationship to the bonuses.
Yes. Yes. It's very true.
Well, I think that was a very interesting piece of knowledge you've supplied us. And I think I speak for all of us that if we can in any way be helpful, let's have more conversation.
Okay, I look forward to that. Thank you so much.
Anybody else have any comments or questions? Thank you for appearing before us.
Thank you very much for having us.
Okay.
Bye-bye.
What else do we have on the agenda? Just as
That was our final presentation. And
unless we want to
so
go into executive session as is customary.
we don't have an executive session on the agenda for today. Did you want to go into executive session?
Well, I should defer to my fellow members.
I would move for a quick executive session.
So we'll do it.
Okay, so let me stop recording so that we need a motion to go into exec.
So moved.
Second.
Let me. We're now in public session.
I take it that we now stand adjourned, right, everybody?
We need motion for adjournment.
Second.
Okay.
Thank you all.
Have a good holiday season in the new holiday.
Thank you.
Thank you. Bye-bye.
Bye-bye.